without any fail. And we are continuously doing this knowledge sharing initiative of corporate profession. And this journey of sharing knowledge, we want to continue in future also. As you are aware that applicability of insider trading regulation are applicable to the listed company and its insider. But if you see this, that it is not confined to only the insider of the listed company, but fiduciary and intermediaries connected to that listed company, they are also are in the ambit of this insider trading. Friends, with the dynamic landscape of securities market in India, listed company need to be collaborated with various intermediaries and fiduciary to ensure the attainment of their objective, including day-to-day functions. In the course of providing their services, the intermediaries and fiduciary inevitably come into possession of certain unpublished price-sensitive information pertaining to some listed company. As you are aware that we have an auditor in the company, we have a chartered accountant as a consultant, as a providing services. We have an advocate law firm which are advising to the company. We have a company secretary who is advising company, practicing company secretary, not inside the company secretary is the insider. Then we have an analyst also, those who are coming and getting the data and advising to the company where it is going down and up. Then we have an insolvency professional, those who are advising to the listed company on various aspects of the insolvency law. We have a various consultant, not only the financial, but the commercial consultant also. We have a bank which is giving loans and which is providing other services. And then these all intermediaries and fiduciary, they are assisting and advising to the company. Now, recognizing and they have a price sensitive information. If a chartered auditor of the company is attending board meeting where they are finalizing and they are doing something, then he is having the unpublished price sensitive information and comes under this law. Recognizing the potential misuse of such information by these entities, SEBI has laid down certain and several compliances under SEBI Prohibition of Insider Trading Regulation 2015 to be adhered by these entities. These compliances, among others, include the maintenance of a structured digital database and formulating a code of conduct of the regulate, monitor, and report trading by designated person and their intermediary relatives also. Maintenance of restricted list aimed at mitigating such risk. Today, we are organizing this webinar because we are realizing that listed companies are only 5,000 or 5,500, and their insider is also, you can make designated person or other insider, say 20,000 or 30,000. But if we see the list of these people, those who covered in this, they are multiplier. And when there is an auditor is doing audit, he is not only doing audit, but his team is also working. And then there are other team members are also there. So if you can multiply this, the number of the intermediaries and fiduciaries are becoming very big. So we have to understand that this particular area is growing and it will expand, because it's not a one person. If Mr. Mehta is doing audit of one company, then his team and his internal team of the office also can come under the this definition. So the objective of webinar is to explore in depth the definition and scope of intermediaries and fiduciary, and dwell upon the implicate compliances of intermediaries and fiduciary under the SEBI PIT Regulation 2015. Friends, as you are aware that if you are a listed company, then various laws are applicable. Let's say restricted list, pre-clearance, contra trade, and Chinese wall. Then you should have an internal control and you should have a structured digital database. But if you follow this law and understand this law, then you will realize that restricted list is applicable to you also in a different format. Pre-clearance is required in your company also. Contra trade is also required. Chinese wall is also required. An internal control system you have to maintain. And then SDD, all the information which you have come to know, you have to feed. So SDD is not only for the listed 5,000 company, but all professionals, those who are working in the listed company, they should also have the SDD version in their fold. And that is compulsory now. So today, for all these things, that what is law, what are the things, why this has come, we have invited distinguished officials from SEBI and experts from industry, those who have gracefully agreed to address and discuss this particular topic. So I extend a very hearty welcome to our guest of honor to today's webinar. First, Mr. Ali Asgar and Mitwani. He's a Chief General Manager of SEBI. He has worked in various departments of SEBI, Market Intermediaries and Supervision Department, Investigation Department, Integrated Surveillance Department, and IA Officer of International Affairs. I welcome Ali sir for this program today. And definitely your vast experience will helpful to us to understand this concept, and as other people will also know that this is not the listed companies thing. This is applicable to them also if you are touched with the listed company. Then we have a Mr. Ananda Kumar Das. He's a Chief General Manager, SEBI. He has been working in SEBI since 1999, and he has worked in various areas of SEBI, including ISD division, corporate finance, collective investment schemes. He has also been associated with formulating various policies in the area of takeover, buyback, and delisting and public issue of companies. I welcome Mr. Das for this program, and in the past also you have come over various programs, and your knowledge and your deep understanding of subject, that was very great for all our participants, and it was appreciated by everyone. Then I extend again a hearty welcome to our learned speaker, those who are actually, they are working as a fiduciary, they are actually intermediaries or fiduciary. So first, Mr. K.S. Mehta, he is a managing partner in S.S. Kothari and Mehta Company, a chartered accountant firm. He has professional experience of more than 50 years. He has expertise in corporate and business restructuring, merger and demerger, valuation, in acquisition and sale, and project finance. And Mr. Mehta, he was the president of PhD Chamber of Commerce also long back. So I welcome Mehta sir for your deep knowledge and your understanding of this subject, that how this will impact and how to protect the audit firms. Then we have Mr. Amarjit Chopra. He is a senior partner, GSA. He is a past president of Chartered Accountant Institute. He served as a chairman of National Advisory Committee on Accounting Standard from 2014 to 18, during which he has been responsible for the implementation of Ind AS in India. He also chaired the committee tasked with revising CARO 2016. He has been member of MCA committee to address various issues related to accounting and auditing profession. So Mr. Amarjit Chopra is joining shortly. And Mr. Chopra is also one of the finest chartered accountant in India, and his deep knowledge and understanding of subject will helpful for the all chartered accountants. Those who are following Mr. Chopra, then they can understand that how they should protect them. Then we have a Ankit Singhi. He is a head corporate affairs and compliance corporate professional. He will tell us how the practicing company secretary should protect them. Then we have a Manoj Kumar, partner, head M&A and transaction of corporate profession. He is a merchant banker. He's working in merchant banking firm. So he will tell us how the consultant and merchant banker as intermediaries should protect them, and what extent they should follow this law, and to whom, how they are covering, and what are their expectations from other colleagues. Then we have a Mohini Vashne. She's a partner and head ESOP and insider law service, corporate professional, and sorry, and she is maintaining the insider trading practice, and she has developed various software of analysis as well as sorry, pardon me. So Mohini has developed the Insilis software and the SDD also. So her experience and knowledge and interaction with various companies will helpful to us. At last, we have Ravi Prakash. He's an advocate, and Ravi will tell us about the how the advocate firm is protecting themselves from this insider trading law. So before I request Mohini to discuss this issue, I just want to tell everyone that the insider trading law is becoming very tough now. And previously, when the law came, the scope was limited, but now slowly scope is increasing. And for the benefit of all other, I was reading one case law of this in the USA, that is shadow trading. Now today you are talking about only on the direct insider trading law. But now US is talking about this shadow trading, shadow insider trading. That means that you are working in a listed company, but you're not buying shares of that listed company. But on the basis of some information of this listed company, you are taking shares of other company in the same industry or which is impacting. Now, this case is very interesting. This is Matthew, who was a Medivation, the company which is acquired by this company acquired by Pfizer, and the person was working inside corporation. So the Matthew, who was working in this Medivation, this is acquired by Pfizer, and he, in place of buying share of Medivation, is buying share of Insight Corporation, which is a competitor or which is a company which will get benefited. So when the Pfizer will take over the Medivation company, then ultimately the competition will reduce and Insight will get benefit. So he purchased the shares of, on the basis of this information that Pfizer is taking over, he purchased the shares of other company that is called Insight. And ultimately, he told to the jury that I was not aware that this law is applicable because I have not purchased shares of the listed company where I have a insider information. But jury has not agreed, and jury has mentioned that that you have violated because you have certain information which are not known to others, and because of this reason, you will get benefited by acquiring shares of other company which will get benefited of certain unpublished price information. So they have asked. So you can understand that today the law is not confined to the direct part, but is indirectly they are covering. So you have to be very cautious. So that's why all intermediaries and the professional firm, those who are advising listed company, they must understand the concept and simultaneously what are the compliance they have to do. They have to maintain SDD, they have to maintain internal control, they have to maintain a Chinese wall with the, you have a, say 10 partners in the company and one is doing listed company, so that partner should not share information to other. Even if you are buying shares, then you have to take a pre-clearance, then you have to take a contracted, you have to follow. So all these laws are applicable. So Mohini will explain all things in detail, applicability of insider trading regulation and fiduciary intermediaries. So I will request Mohini to give her presentation. And simultaneously, I want to announce the next webinar of 169th webinar that will be on front running in stock market and its decided case on 26 April 2024. So over to Mohini. Please explain us the applicability and regulation of this particular concept.
Yeah, thank you, sir. And good afternoon, everyone. So I'm just sharing my screen.
Yeah, sure.
Yeah.
Yeah, it's showing. Yeah, carry on.
Okay, thank you. So now before to start with the applicability on the insider trading regulations on the fiduciary and intermediaries. Pawan sir has very rightly explained and very rightly and very in detail covered that how the people who are not directly be an employee or directly be in the company position or in the holding position in the company who have the first hand on the information. If the any person who comes to with whom the information about the company comes into hand, those people also fall in the category of the fiduciaries, and to them the insider trading regulations are applicable. So to start with, so first is a brief about that when the insider trading regulation has came. So insider trading regulations is not the new one. It's way back in 1992 was introduced. Then considering the market integrity and a level playing field for all the public shareholders, then to strengthen that particular things, the SEBI has changed and overhauled the regulations. And in May 15, again, a new regulations, prohibition regulations 2015 has came into force. But because after 3 years immediately, the SEBI again in 2018 end further pronounced several amendments in the regulations, and that was effective from 1st April 19, and we all are aware of that many of the new concepts like standard structured digital database, system driven disclosures, all these things were introduced in at that time. And from the very beginning, since 2015, if I talk about, the SEBI in the insider trading regulations have very well covered the people who are not only the part of the company, who are the employees of the company, the directors of the company, also the other people who are dealing with the company officials, with the company management, and by virtue of their assignments, their jobs, their business relationship, they come into possession of the information which the company owns. So from 2015 itself, those category of the people are also being covered under the insider trading regulations. So regulation basically aims at prohibiting the trading by an insider. So insider is a very in itself is a very wider term which we cover in later part, who all are insiders. And the person become an insider. That means a normal person become an insider when he possesses any price sensitive information which is not in the public. So that's why he is an insider to that information. So based upon the people who may be categorized as who are all are insiders can be categorized in four broader concepts. The first we can say the listed company. It's applicable on listed companies. Why? Because listed company is the company in which scripts the trading being done. Listed means every listed company, either it's on main board, SME board. All types of securities which are being traded at the exchange. Equity, yes. Debt also. Then all the InvITs, REITs, all these types of instruments now which are getting listed at the stock exchange, even the trading in those securities are governed by this insider trading regulations. So first category is the listed company. So within the listed company, their director, their promoter, their employees, their KMPs, all are being governed by this regulation. The second category comes as the proposed to be listed company. In the proposed to be listed company, because once they have filed the DRHP with the SEBI, then because soon their scripts are going to be listed, the securities are soon to be listed the stock exchange, then their information also become a price sensitive information because the public doesn't know about. The next category comes are the intermediaries. Intermediaries means which are SEBI registered intermediaries. Like if I take a case of a company which is proposed to be listed, with them merchant bankers are involved, and merchant banker have the first hand on those information which the people doesn't know about. So the merchant banker falling under the category of intermediary, they have the information, so regulations are equally applicable on them. Then the fiduciaries. Fiduciary means they are not necessarily be an intermediary, but because of their role, because of their connection or their business connections with the company, they have the information and they are holding and possessing that information in the fiduciary capacity. Like in the same case, we talk about the auditors. the legal advisors, they all have the information which the other people doesn't have. So all these category of the auditors, like the other legal advisors, they also be falling under the under the four corners of the PIT regulations. So in all these things, PIT regulations are applicable. Before we move on to the that what all the compliances are required by the people who are not a part of the company, first we need to understand what the core terms in the insider trading regulations are. So first is the trading we talk about. So trading means subscribing. With respect to this, trading is with respect to the security which is listed by. The subscribing, redeeming, switching, buying, selling, dealing, agreeing to subscribe, redeem, switch, buy, sell, or deal, then pledging of the shares. Redeeming and switching being introduced in the trading definition when the mutual funds also be covered by the SEBI under the SEBI insider trading regulations. So at that time, redeeming and switching with respect to the mutual fund schemes by the mutual fund AMC and the mutual fund designated persons, for them, these two acts also being covered under the definition of a trading. Now the next important term comes into, that is an insider. If we talk about in the insider, there is the definition is very broad because it covers any person who is in possession of or having access to UPSI, unpublished price sensitive information. When we talk about that insider trading regulations, what it aims to, so please note that these regulation aims to regulate the following activities by these persons. First, possession of the UPSI, then the sharing of the UPSI, and even after that, trading in the securities on the basis of such UPSI. Now, from this word, from the last slide, the point comes: what is UPSI? By the name itself, it's an unpublished price sensitive information. And law has given a test, not the examples. They have given the examples. There are 4 or 5 broader examples are there, but they have given the test for each information to classify as the UPSI. And those tests are that it's an information which is related to a company or its security, directly or indirectly. Then it is not generally available, which upon becoming generally available is likely to materially affect the price of the securities. So these tests, if any information passes, then it becomes a UPSI. Examples they have given, like financial results, dividend, change in capital structure, any kind of reorganization in the organization is there, merger, demergers are there, and the changes in the KMP. Even they have covered these changes in the KMP as a part of the UPSI. And we know generally that UPSI originates within the company and circulates internally as well as externally. When it flows externally, it reaches to fiduciaries and intermediaries. But vice versa is also there. The information given by the company and is converted into UPSI by the fiduciaries and intermediaries because they are the consultants. Now, to understand the things to understand more on this thing, we take the 2 examples. How the fiduciary have this knowledge that the company have some UPSI. Now, taking the cases, example 1, we take financial audit, which every company, every listed company, SME, half-yearly, and the other main board companies quarterly, they have to undergo unaudited financial audits. So what they will be doing, the financial information are there in the company, and on the basis of that, the company prepare financial statements. Then they pass on that financial statements and other supporting documents to the auditors. Now, auditor is holding that information now in the fiduciary position. Then, once the auditor do the audit, it will be presented before the board and the audit committee, and then it will be made available to the public. So in this flow of information, we have seen that the auditors also be aware of what the financials of the company are in this quarter when the other people in the public not aware of. Now, example 2, appointment of managing director is a transaction-based example wherein the company is deciding to appoint a new managing director. He is finalized, and the other people who are associated in this finalization, they also aware of that, yes, the new managing director is coming into the company. Then for them, they have prepared some draft resolution, or they can also hire at the simultaneously. They have the retainers on board, or they have the advisors. They are also now aware of that, yes, soon the Mr. A will be the managing director of XYZ company. Now, it will be again, the process need to be followed. It will be go to board for remuneration NRC, and then it becomes generally available information. Now, along with the internal company officials, retainers and advisor also aware of that this transaction is going to happen in the company. So if we talk about, so in this, we can easily see through these examples that the people internal to the company and the people who are external and related to the company for this particular transaction possess identical UPSI. And consequently, employees of the retainer and advisor bear an equal duty and responsibility to adhere to the SEBI regulations and refrain from utilizing such information for any unlawful gain to maintain market integrity. So we have used two terms, fiduciary and intermediaries. So fiduciary, so who all be covered under the fiduciary responsibility? They are the auditors, accountancy firm, law firm, analyst, even the insolvency professional entities are there, consultant, banks. They are advising on a time-to-time basis to the companies. Intermediaries include like depository, brokers, merchant bankers, portfolio managers, investment advisor, share transfer agents, because they also have the information before it goes into the public. Even the people who are providing investment advice, they are also be covered under the intermediary, and they have to follow the insider trading regulations. Now we come to that on all these categories other than the listed company, unlike listed companies, they also have to follow and they have to comply with the various provisions of the regulations. So there are basically the 6 compliances we have categorized, which they need to. The first is they should have the code of conduct for the designated person and for the immediate relative of the designated person. Similarly, like the listed companies have their code of conduct. The second one is they should have their restrictive list, Schedule C. The code of conduct is governed by a model code of conduct is given under Schedule C, whereby the listed restricted list, pre-clearance, counter trade restrictions are there. Then that every fiduciary and intermediary have to appoint a compliance officer in his organization. Then they should specify the designated persons in their organization. Like in the listed company, they designate that these out of the 1,000 employee strength example, the 100 persons are designated person. Similarly, in the fiduciary and the intermediaries, the company, the organization have to define the designated persons list. Then they have to maintain the internal control systems. And then the last but not the least, structured digital database, like a listed company has to maintain for the flow of the to record the flow of the information. Similar thing need to be maintained at the fiduciary and intermediary level. Giving a little bit detail about all the regulation and the compliances. So first is the code of conduct. So every organization who is dealing with the listed company, so for them, they have to formulate a code of conduct to regulate, monitor, and report trading by their designated person and their immediate relative. So they all have to create the code of conduct, and what the Schedule C, which is a model code of conduct, covers. First is restrictive list. Restrictive list means the list of the securities of the company, the listed companies in which the intermediary and fiduciary are dealing with, or they have the information, they have to categorize those securities as in the restrictive list. And that list should be maintained confidential by the compliance officer of the organization and is used for monitoring the trading by the employees of the fiduciaries and for giving pre-clearance of the trade. Now, the second should in the code of conduct, the compliance of it is to be mentioned that how the pre-clearances need to be obtained by the designated persons in the organization. So a limit they want to fix, or the companies are completely prohibiting the trading by the people for the companies which are covered under the restrictive list. Then contra trade, like in the listed company, the employees can't enter into an opposite transaction for a period of 6 months. Similarly, the contra trade restrictions, that means so that the people will not gain an unlawful gain from the script trading in the scripts of the company. The contra trade restrictions also need to be enforced in the intermediaries, fiduciaries as well. And then Chinese wall concept, because not necessary that the entire organization is aware of that in this particular listed company, the transactions are going on. So properly, those departments, those areas where the information generally comes, they should be separated from the other departments of the company, organization. So Chinese wall policy need to be implemented by the fiduciaries and intermediaries as well. Then these organizations need to designate one compliance officer there. And the compliance officer definition is same. It's the who is financially literate and is capable of appreciating requirement for legal and regulatory compliances under these regulations. And the responsibility mainly is for the compliance of the policy, maintenance of record, monitoring of trades, and implementation of the code. So this is the role of the compliance officer of the fiduciary at intermediary. And important to note, the compliance officer of a listed company need to only monitor about and need to comply with the trading and in the scripts of their company only. But the compliance officer in the intermediary and fiduciary need to take care of the things, because the intermediary and fiduciary at the same time be handling many of the information of many of the listed companies. So the responsibility of the compliance officer in the intermediate and fiduciary is very important. Now it comes to the next compliance, that is the designated person. Every such organization have to designate the designated persons in the organization basis upon their role and function in the organization, and basis on the excess of the information which they have. Similarly, seniority and professional designation matters in that. And the same definition comes to and applies to this fiduciary and intermediary. Like employees, board of directors are there. All promoters of the organization need to be. Then the chief executive officer and the employees up to 2 level of the in the organization, they should fall under the category of designated person. And any support staff, secretarial staff or IT staff, they also be covered under the designated persons category. Then internal controls they need to maintain. They should identify the designated person. They should first they have to create the process or SOP how they will be determining the UPSI of the other companies with whom they are dealing to. Then how they communicate, how they procure the UPSI from the company. Then with whom the UPSI will be shared within the organization. Those SOPs the organization need to have. And then definitely periodical process review need to be done so that the internal control system will not lose its impact. The last, they have to maintain the structured digital database. Like in the listed company, they are maintaining when they are sharing the information within the organization and outside the organization. So as soon as the information is transferred to the sent to the intermediary and fiduciary, then they also have to maintain in the same respect the SDD at their own premises. So they can't use the SDD of the listed company. They should have their own SDD in place wherein they have to record the nature of the UPSI. Yes, with respect to that restrictive list, with they have got this information. Then the name of the person who have shared the information, with whom they are sharing the information, including the PAN number and any other identifier of those people from whom they have received and with whom they are sharing. And as I earlier just informed that it should not be outsourced and it should be maintained internally. So you can't use the SDD maintained by the listed company. So we also, and the corporate professionals in-house, developed this Intellisys tool, which captures all the, and it is specially designed for the intermediaries and fiduciary. We have for the listed companies as well, and we have designed it specifically on the basis of the requirement of intermediary and fiduciaries, wherein we are maintaining this unlimited projects with respect to the restrictive list, unlimited restrictive list we can manage, and also the every fiduciary and intermediary have to take annually and quarterly on monthly basis the transaction and holding statement, because generally they need to evaluate what the people are trading or in the restrictive list or not. Then UPSI audit log is also available. So this Intellisys tool we have, and this kind of report we are generating through this particular application. So this is about the compliances. Before I end this presentation, I just want to discuss one case which gives an insight that how the intermediary and fiduciary can be punished by the SEBI when it comes to that they have done the insider trading. So in one case of ABC Bearing Limited, it's a merger with of ABC Bearing and Timken India Limited, wherein the UPSI period is 2017 January to July, wherein the auditor Himanshu K. Desai was attending that meetings of the merger in the company. And then because they are attending the meeting, he is attending the meeting, then he is aware of the information which the public is not aware. And because of the position of that UPSI, he has passed the information to other people and it leading to an unauthorized trades. The summary that how the information has been traveled by the auditor is that first Himanshu communicated this to another partner, Anirudh. Then the other partner communicated to his mother. Mother executed the trade on the basis of that UPSI, and a profit of around 4 lakh was earned by such trade. Penalty is imposed on the auditor and as well as the mother, because she has traded on the basis of the UPSI. And the penalty, we can see that how much the imposed by the SEBI in this cases, 10 lakh for the auditor, the other partner again 10 lakh, for the mother 15 lakh because she has traded actually on the basis of the information. Then on the CFO of the company and the son of the CFO as well. So we can see from this that for the information sharing only, the auditors are being penalized under the insider trading regulations. So again, to summarize, these are the category of the intermediaries and the fiduciaries who need to have this insider trading regulations to comply with. So this is the list, and all these people should take care of when they are handling the information of the listed company. Even the people are dealing in a single company, they have to comply with. Yeah. Thank you. Thank you from my side.
Okay. Okay. Thank you. Thank you, Mohini, for covering extensively. Now I will request Mr. Ali sir and Ananddev sir. Please tell us that why this concept of intermediaries and fiduciary is important, and what is the reason SEBI is giving more focus to this, and how this is impacting, because you must be receiving cases. Recently, Mohini has explained this case. So you must be receiving various complaints, various things, various issues which you are facing when you are doing investigation or inspection or getting information. So over to you, sir, your views.
Thank you very much, Mr. Vijay. And thank you to Corporate Professional once more for giving us the opportunity to come to their platform. Again, I would like to congratulate Corporate Professional for last almost 4 years. You have been running this show and you want to bring compliance culture in the country. Again, congrats to you and your team. To start with, I will just say that compliance is the most abusive word in the market. Because when you say compliance, you start thinking cost. But it's a myopic, it's a very short-sightedness. But if you take compliance in long term, it benefits. In fact, I believe that in short term also, compliance is very, very helpful. And if somebody wants to really, everybody comes to the market to make money. So he wants to make money and, to have success, he needs to comply. And we have so many examples in our own market where we have seen the new entrepreneurs in the zeal to, acquire more profit, they have just ignored the compliance culture. And because of which we have seen, they were supposed to go to new heights, but they were buried in the dust. Coming to the topic of insider trading, PIT regulations are one of the first regulations which SEBI had drafted in 1992. If you see the history of SEBI, so with the brokers regulation, we had this PIT regulation. And PIT is talked a lot in the international market also because asymmetry of information creates a lot of issues in the market. You don't have fair market integrity is lost. And especially in today's time when we are seeing that FPIs and other people are looking towards our market, and we are one of the among the top 5 market as per market cap countries. So people are looking at us. And if we do not have PIT regulation, especially for the fiduciaries, I'll come to the point why we want the regulation for fiduciaries also. If we don't do that, we'll see that we will very soon lose our integrity, and people looking at us and people investing in our country, they will not come to us, they will go to other countries, and other countries are ready to embrace them. So it is for good of a market that we comply with these regulations. Coming to the mandate of SEBI, when we started, is to protect the interests of investors, development, and protect the markets. So this regulation is very important because for listed companies, the UPI is with them. The designated persons are having the UPSI. But when they share with the professional, see, it is not sharing is not for making money or some for illegal thing. Sharing is required because the company requires the professional help of the lawyers, the auditors, merchant bankers, and all other intermediaries and all other fiduciaries. So it becomes very much necessary. We can control the company people. Company has internal code of conduct. And as we heard Mohini saying different aspects, they already have it and you can control that. But a person who is not part of the company, it's very difficult to control him because and we saw one case also, and we have many such cases in SEBI where we have seen the information has passed. Earlier, the information which used to be passed were traded by the same person, but the market has become and the players have become very, very intelligent. So now we have mule accounts where a person does not trade on his behalf, but he trades on behalf of some other entity. So it becomes very much necessary that to bring this fiduciary under the ambit of PIT. In 1992 regulation, a mention was made where it was said connected person also comes under PIT. But in 2018, we have got the amendments where we have got the code of conduct, a sample code of conduct, which has to be adopted by fiduciaries. So it becomes very much necessary that fiduciary starts implementing this regulation. You might have heard last 1.5 years, and in corporate on the platform of Corporate Professional also, we had some webinars where we have discussed SDD. So SEBI was very much wanted that the listed company should have SDD. Whoever shares any UPSI, his name, his details should be entered into it. We mandated the stock exchanges to inspect the listed companies, and we are almost 99%. Almost 99% compliance we have seen in last 1.5 years. Coming to the other aspect of this, that is the fiduciaries. Most of the fiduciaries would not come directly under us. So don't get happy that they don't come under us. So SEBI, hum jo karna chahe kar sakte hai. But you know what? SEBI regulation, SEBI Act gives a very interesting point to us, that when we are doing investigation under Section 11 of SEBI Act, the Act gives us powers to ask for information, call for information, statements, and other things from all those who are related to the securities market. So indirectly, all the fiduciary comes under us, and we can ask them questions. But as you know, we play with two things. One is principle-based regulation, the other is a rule-based regulation. For the listed entities, we went by rule-based regulation, and Mr. Pawan and his team were very closely, we were working. Okay, we really made it rule-based. You know, you do 1, 2, 3, 4, 5, because earlier we wanted a principle-based regulation, but you know, jab tak danda nahi chalta hai, so people don't understand. So we had to use that danda for the listed company. Don't worry, as on date, we do not have any future plan to have danda for the fiduciaries. We would like to go by principle-based regulation. See, a person can say, a merchant banker or a lawyer or a chartered accountant can say, kya chance hai, main nahi karunga to kya hoga? Nothing will happen. You can go ahead, don't do it. Don't maintain SED. Don't go follow the guidelines of the PIT. You know, but once, if you come under a radar, then you know what happens if somebody comes under the radar of SEBI. So in his full life, his full practice and everything, you know, once black spot can spoil his career. So we would appreciate and we would want people that on their own follow the PIT regulation. It is good for everybody. Because, you know, I'll just quote something. About 25 years back, this is what during my earlier career days, you know, it was very common among our friends that, you know, if you want to make money, and I was not much related to SEBI that time, if you want to make a lot of money, you go to some professional who is related to the listed company. Unke paas khazana hota hai information ka. And on that basis, you know, you can make a lot of money, way back 25 years back. But that khazana is not anymore there. It is there. Khazana to hai information ka. But in today's time, it is very difficult that you keep the khazana and you can keep quiet and make money. I will ask Anindya to just take it over, because he can tell you how this khazana can be used and misused and how SEBI can be behind you. Thank you very much.
Thank you, Ali.
Okay. Thank you, Mr. Ali. Yeah, please.
See, SEBI has a very sophisticated surveillance system, and it throws an alert. So it looks into any kind of variation in a trading pattern, vis-a-vis historical pattern, any kind of extra profit being made by an entity, and it detects any kind of aberration in the market. See, these alerts are examined, and then SEBI will get after the person who is doing any kind of manipulation. So that can lead to a fiduciary also. So a fiduciary or anybody, actually, if you see the regulation, not only fiduciary, but anybody who is handling UPSI gets covered under the regulation, whether fiduciary, intermediary, or anybody else who is handling. So it gets connected to the fiduciary or intermediary. So a fiduciary needs to be, or intermediary needs to be very careful, and expectation from them is that the confidential information needs to be maintained. So once intermediary or fiduciary or anybody who's handling UPSI receives a UPSI, confidentiality of that UPSI needs to be maintained. So for that organization, that proper control system should be in place so that UPSI is handled properly. Now, within that control system, this UPSI should be shared only on need to know basis. and there should not be any leakage. So on this leakage only creates a problem. And finally, when leakage is misused and get caught by SEBI, then unnecessarily that person will be affected as well as the organization from where the leakage has happened. Therefore, it is necessary to maintain the flow of UPSI within the organization in SDD, and also the trading of and the list of designated person and monitoring the trade of designated person. So again, I wish to say that nobody should think that they are not being monitored. So surveillance system of SEBI is keeping watch on everybody, anybody who is trading, and once any insider trading is found, it would be linked back to from where the information has leaked, whether it is listed company and or fiduciary or intermediary. So I wish to thank Mr. Vijay and corporate professionals for giving me a chance to speak. So these are my points.
Okay, thank you very much, sir. Thanks for telling the inside of this and the purpose of this particular thing. Thank you very much. Because we are receiving so many questions and I have shared some questions which we have received. So we'll take up. Now I'll request Mr. K.S. Mehta, please, sir, as a chartered accountant and audit firm, you are an auditor of various listed company. So when Mr. Mohini and Mr. Das as Ali sir has explained to you, now this is applicable to all companies, those who are in the fiduciary capacity and intermediaries connected to the company. How you are protected and what is your take on this, sir? Then I will request after that Mr. Mehta, Mr. Amarjit Chopra's view. Sir, you have to unmute yourself, sir. Yeah.
Pavanji, just 3 or 4 small things. But before that, let me reduce the seriousness of the discussion so far so that we can go back to serious discussions. I was a director in a company which was a very well-known banking company. I was a director of one of its subsidiaries, and they had a collaborator from UK. The chief executive was to move out. One day we suddenly find a gentleman from the London office of the UK company landed up in the joint venture company office, and he had records which indicated that the CEO who was leaving was talking to other colleagues to join him in a new company. Now, while I said it in a lighter vein, this is the kind of perhaps controls that one will have to set up in a company, even by the fiduciaries, if they want to keep track of all that is happening. Far too much is required to be done, and it will be done. In due course, the fiduciaries will have to do it. Just 2-3 technical points. One, you mentioned that this law will apply to the fiduciaries engaged with the listed companies. I think it will also apply to the fiduciaries engaged with the subsidiaries and the associates of the listed company. Because, for example, the results of the subsidiary company will certainly become unpublished price information, UPSI, to affect the price of the holding company. Secondly, this matter of being able to maintain strict confidentiality in the case of large audit firms, as well as in the case of mid-sized audit firms like that of Mr. Amarjit Chopra and the firm where I'm involved with, it will not only require a China wall between partners, it will require a China wall between audit teams under one partner, where under one partner, if he is auditing 4 or 5 companies, even the audit teams within them will have to be explained, and it should be drilled into them again and again as to what kind of China wall would have to be maintained. And that is going to be a very difficult situation. But it will have to be done in due course. I can only mention to the 2 officials from SEBI who have in a very humorous way shown us what are all the problems that are likely to come because of the tremendous monitoring power that SEBI has. As you are aware, Pawan, I've been very much involved with SEBI earlier, and it is remarkable the way SEBI has developed its technology and its power to be able to monitor the markets. Same thing has been, I would mention about the information which is in the hands or comes to the hands of the subsidiaries. First, the subsidiary officers themselves would have to caution all the associates and fiduciaries, and legal documentation and agreements will have to flow so as to protect the company officials and simultaneously caution the fiduciaries. Now, what kind of information would be confidential and what would not be confidential will become a matter of great debate over a course of time, because some of this information may on the face of it certainly be price sensitive, but some of it may not appear to be price sensitive and yet be price sensitive at the end of it. Both types will become a matter of debate, and perhaps a few examples would in due course come out in frequently asked FAQs that SEBI may come out with. In fact, the FAQs will greatly help, because by now corporates are very well aware of the implications of this law, while fiduciaries and intermediaries have not become so much aware about them at the management, at the lower levels and the middle level. The managers certainly know, but the middle levels are where we will need to implement this much more. And one of the examples which I mentioned, I congratulate SEBI on having come out with a model code of conduct which they have attached to this regulation. And I would only suggest that just like they have held this workshop with you, they need to take this up and do workshop in all the major urban cities with the chambers of commerce and with groups of, with the Institute of Chartered Accountants, Institute of Company Secretaries, etc., in a joint manner. This lesson has to be driven home very quickly if we have to maintain the integrity of the markets and if we have to build a much greater culture more intensively. Thank you very much.
Thank you very much, sir. Thank you for giving your insight. Now I will request Amarjit Chopra, sir. Sir, as I discussed with you yesterday, people are not taking seriously this particular law. They are confused that the insider means the person who is working in the company or chartered accountant and audit firm. They are connected only to that part which is if they have any price sensitive information. So that is right. But the way SEBI is talking about it means that even if you don't have any price sensitive information, but you are connected with listed company where there is a possibility to get the information, you have to protect, you have to make all these things. What is your view, sir, and how you are handling this, and what advice you want to give to all professional chartered accountant and other, because this is applicable to all. Over to you, sir.
Thank you, Pawanji, for two reasons. Number one, that this is one of the most sensitive topics, if you really ask me. And number two, that I am able to see K.S. Mehta for that matter. He has been one of my mentors for that matter.
Okay.
I think to a very, very large extent, the credit for whatever I am and wherever I am goes to him. When I qualified in 1975, at that time, probably I was looking up at him basically to help us out. So that's...
Amarjit, please don't
I'm
embarrass
really
me. What
grateful.
you are saying is not correct. Let's go on.
No, sir. Anyway.
Chalo.
I will only say, Pawan, that what you have done today is an eye-opener. Frankly speaking, these programs have to be much, much larger in numbers on this particular topic alone. Forget the other topics. Small and medium practitioners may not even be aware of it. Let me admit this. I may be belonging to a profession, but the fact is that how many of us will have structured database, digital database in our offices today, where even the audits of the listed entities are being conducted. I'm very frank about it, and I'm very blunt about it, because till the time we admit certain deficiencies, probably the improvement would never take place. To me, the danger is that we have moved from virtually no regulation at one particular point of time to an over-regulation. The difficulty of the chartered accountants, the practicing chartered accountants, I think Mehta Sahab has brought out very fine, only in one line, that probably there will be a need to create a Chinese wall between the various partners, the teams of within the same firm, which are auditing different entities, listed entities. You may be able to monitor your partners. You may be able to tell them that the spouse, their siblings may not be able to purchase the shares, basically, or sell the shares. But how do you look at the article clerks? How do you monitor them? I think because most of the work in the case of the chartered accountant firms is conducted at a lower level first, and then it comes to the higher level. And it is not that you tell the article clerks that you will not look at the minute books. In certain cases, probably the minute book of the companies may have to be given to some of the article in the final year, who is in the final year of the chartered accountancy examination for that matter. Now, if in that particular minutes it is said somewhere that the company is looking for some acquisition, some negotiations are going on, some sale of land is to be taking place, some sale of the undertaking is to take place, or some other discussions are there.
Yes.
How do you control that? To me, that is a major point today. You may be able to brief your chartered accountant, you may be able to brief your partners, but then getting the PAN numbers of those articles also, or probably the siblings of those articles, probably the mothers of those articles, or the dependent parents of those articles, it's going to be a Herculean task. I think we all need to understand one thing. Is it over-regulation? Is it regulation, or what it is? To the extent that you are talking about the partners, that's fine. Partner, you designate him as one of the persons. There is absolutely no problem. You may designate some of the employed chartered accountants as the designated person. Absolutely no problem. But what to do about the articles who will have access to that price-sensitive information? Not only that. To me, the problem will be creating that digital, structured digital database for that matter, SDD. You will have to record what is the unpublished price sensitive information that you have collected from the various sources, from whom you have collected, and to keep that confidential within the organization. I think this is a major challenge which we all will be facing. And probably there is a need today that there has to be more talk. Institute of Company Secretaries, Institute of Chartered Accountants, Institute of Cost Accountant need to sit together, do the brainstorming in this particular area, and make sure as to what kind of control, internal checks and controls have to be applied to make sure that the chartered accountants or their staff or the firms are not caught on a wrong foot. Because the kind of penalty which Mohini brought out, probably for a profit of 4 lakh rupees, total sum which was paid was about 44.2 lakh rupees. Now this is, and of course the penalties can go up to 25 crore rupees if you really ask me. Now that may depend upon the volumes, but the matter is that if somebody has to even pay 2 crores or 3 crores or 1 crore, probably what will happen to those firms, what will happen to those chartered accountants, I can't even, I shudder to think of it for that matter. So I must say that you have done a wonderful job today arranging this particular talk on this particular topic, because I will be talking to my partners. I will be making sure that even ICI takes up this particular topic on the front foot rather than on the back foot for that matter. So Mohini has already done my job. She has actually helped me out in my job. And what Mehta Sahab brought out was very nice, that what happens to the subsidiaries of the various listed entities. There could be certain subsidiaries or there could be certain joint ventures. Why only subsidiaries? There could be certain associates also, where you may be directors also, the auditors of those associates or joint ventures of the subsidiaries. What happens in their cases? And whether we are even looking at this kind of digital, structured digital database in those companies also or not. These are all matters which will need a lot of attention, lot of care, and a lot of diligence. Because so far, probably some of the mid-level firms may be living under a wrong impression that only as statutory auditors you may be covered by it. You are covered even as internal auditors. You are covered even when you are undertaking a due diligence of a particular organization. So all those roles that you play in these entities, you are covered by this. And if you are covered by this, all that data you have to maintain. Firstly, you have to collect that data. You have to collect those PAN numbers. You have to collect the names. You have to record that unpublished price sensitive information, bring it on record in your own organization. To my mind, every mid-sized firm today which is handling a listed entity need to have the training programs on this topic within their own organizations first. To me, that will be imperative today. And if they don't hold it, because what kind of information will be fed into the SDT, that itself is going to be a matter of debate. And that's because if somebody has just started looking for an acquisition, does it become an unpublished price sensitive information? To my mind, no. It's only after something concrete has happened that it becomes an unpublished price sensitive information for that reason. So lot of work will have to be done so far as this particular part is concerned. And I'm very sure that the medium firms will be able to take it up. I think it is not that the profession has not been sensitive to the many areas. Today, particularly with the all kind of technology which has come in. And the other thing is that it will have to be done internally. It cannot be outsourced. So that's another challenge. Making your organizations technologically advanced that you can actually do it in-house, that's going to be another challenge for you. So my only submission is that there's lot of information. When you even sit on the boards of the companies as chartered accountants, forget about the I think Mehta Sahab has the experience. I also have the experience. You also have the experience. Lot of information which comes, particularly when you sit on the subsidiaries, lot of information comes and loosely you can speak something. Probably each one of us will have to close our, shut our mouths basically, and not to speak anything about the entities at any point of time in the years to come. And I think auditors will have to practice it more in the circumstances. And some of the internal auditors do collect the information and they also are privy to the information. And internal auditors don't consider themselves as the auditors. That's another problem. So to me, wherever the firms are acting as the internal auditors, their liabilities are as much as that of the statutory auditors for that matter. And some of the chartered accountants have been doing earlier the evaluation. They are privy to some of the information. What kind of role they will have to play, I don't have to comment upon that. So I think it's a big challenge. It's a real big challenge. And but probably we need to really accept this particular challenge rather than shirking away from the responsibility, because there is no way that it can be done. There's no way that we can get away from this responsibility. I think Moni's presentation was just excellent. Moni, I just commend you. You brought out everything. Certain things I wanted to speak, but I think since you have already done it, I will not repeat. I will only say what is the implication for the profession. For implication for the profession is really great, and it needs to be understood in the right perspective by each auditor for that matter. Thank you, Pawan. Thanks for the opportunity.
Thank you very much, sir. And you have rightly pointing out the way law is interpreting there is no difference between listed company and the intermediaries office.
Yeah.
What you have mentioned, that is very alarming. Also, your junior clerk or junior auditor or junior trainee, he is also covered into this.
Yeah.
So that is one part, and you have to follow all things.
Yeah.
You have to maintain the SDD, and now the question is, SDD is a really difficult task for the companies also. So how you as the firms will follow, and secondly, the small firm, how they will follow.
Preserve it for 8 years. Preserve it
Yes.
for 8 years.
Yes.
And if there is an investigation going on, then till that time, the investigation is over. I think it's not a small thing to happen.
And sir, the SDD is also there. Whenever you are getting any information on this, you have to feed yourself in the SDD portal.
Yeah.
So that is, and that portal is also you have to keep, which is not, which you can't modify. So this is really very tough thing, and that is happening because now I know so many people, those who are doing research on the basis of this, that this company's performance, or they are doing this much of what you say, sale or purchase. So now the auditor or internal auditor, they are more prone to get this information and more close to that information. So they can predict the future immediately. So outsider can predict the future. So why he can't predict? So it is not only that you have some price sensitive information, some information which is not today price sensitive, but in future it become price sensitive. That is also coming to this, and that will also be a challenge, sir. So thank you very much, sir. And you are rightly pointing out that all the institution and the advocate firm, they must be sensitized about this particular concept, and more people should understand this. And Mohini is taking this lead and giving lectures at different forum, and she has made a software for SDD for fiduciary as well as the small firm. So she can tell us.
Pawan, at this particular point of time, I will like to leave. I have another meeting actually.
Yes, sir. Yes, sir.
So
Thank you.
I would also like to congratulate Mohini very much. It was a very good structured presentation, and especially with great confidence.
Yeah, we will share this presentation to all the participants, including our this. So now come to the Ankit. Ankit, you are doing various companies, but you are advising them. You are doing internal audit. You are doing external audit, statutory audit, or what not. You are advising on various issues. So how you are handling this, and what is your take on this?
Thank you, sir, and good evening, everyone. I can definitely agree to what Amarjeet sir has said. It's a Herculean task, I believe, to safeguard UPSI. But I think considering the obligations that the law has casted upon the listed entities, we have to also be mindful of our role as one of the someone who possesses UPSI of such listed entities, because we have to also ensure that there has to be symmetry of information to the extent the information is available to us. So as you mentioned, we work with a lot of listed entities, and during our very regular interaction, we have access to a lot of UPSI and a lot of information from their end, which is UPSI. from time to time, and therefore it becomes very important for us to ensure that whatever we have access to is we maintain that confidentiality over that information. And like any other professional, it is also challenging for us sitting in an office which is where we have different teams sitting across. Even discussing on topics like this at times becomes very important for us, and it's very crucial that we ensure that the sanctity of the UPSI is maintained. So to large extent, we have tried to build or create some parameters around it. By first of all, I think sensitization of team is something which is very important, so that they also understand first of all what is UPSI and to why it is important as a fiduciary for us to maintain that confidentiality over UPSI, the obligation that we owe not towards only the listed entities, also towards the regulator and the capital market as a whole. So sensitization is something which is very important and which we continue to do so on a regular basis with our teams. Secondly, a lot of companies have already considered as part of their designated employees or designated persons. So where our demat accounts are also linked with the restrictions under the systematic trading, the restrictions that are triggered as soon as the results are the quarter is closed. So to that extent, we are also safeguarded, and I think it's a welcome move that it takes worry to some extent that not any of us can trade during that period. Another important thing is that what we do is also to enter into NDAs with our employees, ensuring there is a policy of not to trade in any shares of any class of companies, where we are advising creating a restricted list of such companies, sensitizing employees about such list on a very regular basis. So these are some of the things which we are already doing. So what SDD is doing, we are also in a way trying to implement SDD for some time now, trying to build create information. I think similar to companies, listed companies, capturing information in SDDs is where we are also finding challenge. So we are also trying to find new ways like capturing of our email IDs in the SDD directly to that extent. Then making sure the UPSI is also only shared to key employees. So when we engage with our clients, we advise them as to how the information is shared. General information can be shared to the team as a whole. UPSIs can only be shared to senior persons of the engagement or with the SPOC only. To that extent, we avoid too much discussions in front among us team. So to a large extent, we are taking a lot of steps to ensure that we maintain that confidentiality of UPSI. SDD is something where we are continuously working upon. I would not say that it's very 100% compliant. At times we do face challenges in also identifying what should be entered or what should not be not. So then in those cases, we do consult with our listed client as to how they are also treating those things. If they are also entering in their SDD, then we do also take the same approach and enter into our SDD that we maintain. So it's as Amarjit sir mentioned, it's definitely something which is very important, and with the kind of orders SEBI is issuing, the kind of surveillance that SEBI is implementing these days, it's matter of time that it would also be very easy for SEBI to not only to reach out to the employees of the company, to also reach out to the employees of the fiduciaries, even to the ones these employees keeps on talking, their friends, the manner in which they are communicating with their relatives, their friends. They would also be in some way try to encompass all those as part of their surveillance mechanism, because we are seeing in a lot of cases where some investigation is undertaken by SEBI, the kind of data SEBI is seeking, pen of all relatives, pen of all DPs, then pen of all your consultants, phone numbers, mobile company agency which their numbers is using. So the kind of data that SEBI seeks in as part of the investigation is so wide, it will leave very limited door for anybody to escape. Even if you've talked for a 5-second call with somebody who have you shared on a UPSI, that call can be captured if that person has done some trading directly and it has been on the radar of SEBI as part of the investigation, and as part of, once we share the number, if SEBI runs a check as to who with whom that person has discussed or had a call, if and our number turns up as part of that process, then it certainly raises a red flag. So, and there are a lot of other things which SEBI can track as to how you're interacting with all of these concerned person. So therefore, everybody has to be very mindful about how they deal with this situation involving UPSI. So this is something I think will involve over a period of time. I think which technology, a lot of things can also be developed at our level, where we can do downsizing, or what we can do, creating much more Chinese wall in terms of technology as to whom information should be shared, how we should communicate on over that information, how we should discuss. So I think it's both exciting times to be ensuring that how we fully comply the law, but also it is very we have to be very vigilant as to how we act during that time when we are in position of UPSI, and how my team acts during that point of time. So I think slowly and slowly there will be a larger compliance from fiduciaries. I do agree, a lot of small, medium scale professionals, even good firms have still not implemented SDD. There is also at some point of time there was lack of clarity whether SDD needs to be implemented by the fiduciaries or not, or it is something which the company is only doing. Because if company at their end is maintaining an SDD where they have entered, for example, they have shared some information with Ankit or some of my team member, and they've entered in their SDD, whether why I need to maintain that SDD at my end, why I need to do a double entry, because if something has already been entered in the system of the listed entity, my name has already been captured. So why I need to do? I think in that case, at times, listed companies do share some information with us. Then we do share some information with our teams or some other partners in the firm whom we need to seek guidance. Those things which are something which the listed entity is not aware of. So I think to that extent, we are under an obligation to do an entry in our system that once we receive something as an input, where we have as an output, where we have disclosed or discussed those information to other members of the team, which are not part of the SDD of the listed entity, or which are outside the organization. At times we do discuss some cases with our friends or other senior colleagues in the profession to seek their views, how we should be doing that. So to that what extent we also need to cover those things within the SDD. So a lot of things one need to consider while handling UPSI, and also while implementing a system of SDD. Because once you create a system, it is also necessary that you have to do compliance to that extent. Just installing an SDD within an organization will not serve purpose unless and until you are truly complying that by making all the relevant entries as and when it is required to be maintained. So I think as I said, both exciting times and also something which we should be very mindful of and vigilant.
Okay, Ankit, thank you very much. You have rightly pointed out that it is very difficult to maintain this, but system has to develop, and by doing this, you have to understand how things can move. Now, I will request Ravi. He's an advocate and he is doing work of lot of listed company where they are receiving notices, which is price sensitive information, also sometime investigation. Sometime you are working on some IPO project, some documentation of the funding. So how you are handling this and how the Chinese ball you are creating, which system you are developed, and what's the way you are creating a Chinese wall.
So thank you so much, sir. And I think the process by and large remains same. I think what Mohini ma'am told, what Ankit sir said, and other eminent speakers said, including from SEBI, they all talked about the principle-based regime that needs to be followed. There is another thing from where I would like to start. It is now, by now, very clear from the discourses we had so far, that the law and the requirement of complying with PIT regulations and the entire paraphernalia with which it comes for the fiduciaries is certainly harsh, or may be viewed as such. But there is an old adage in law. In Latin, it is called dura lex, sed lex, which means the law is harsh, but it is the law. So therefore, the situation as it exists today, it exists. And there is a duty of compliance on fiduciaries. While the intent is quite clear, and the goal is also, I think, clearly visible, and it's a huge goal to achieve. I feel that there would be suggestions from each and every corner about the idea how to achieve this goal, because there is no other law, and I say this with some conviction, which is as fluid as insider law, as dynamic as this law is. It exists across all jurisdiction, entire world. Wherever there is a securities market, you would see this law is there. And you would be surprised to know that the issue of fiduciary duty arose in many jurisdictions way back in 1980s and even before. One of the famous cases of United States Supreme Court is the case of Dirks, SEC versus Dirks case of 1983, where this misappropriation theory was discussed and the fiduciary duties were also deliberated on. And they did return a finding that yes, even though a consultant or a professional has a temporary status of dealing with the company's information, but are still under the duty to protect it. Because essentially, whatever information you obtain, maybe UPSI or may not be UPSI, although I'll come to this later on, but whatever information you obtain as a fiduciary, it is based on the principle of actual expectation of confidence and trust, that you would not misappropriate this information, that you would only use this information for the purpose it is being given to you. Now, it is one step ahead. SEBI, probably we would be uniquely positioned in global landscape where these fiduciaries are requested to ensure that their entire ecosystem is following this principle of protecting the data, creating a trail of the data, and then also not acting on such data which is obtained through fiduciary and under the fiduciary relationship. It could be said that we are unique in this sense as a market. But there are dangers of it. The discussions on the issue of how far the duties of fiduciaries go, in what all situations they can be held liable, would they be held vicariously liable for a mischief of a particular employee or their agent, or they are liable to ensure an internal control system. And one of violations would be seen as the violation of the individual, not of the organization or the fiduciary institution, because in practical world, we will be dealing with a lot of fiduciary institutions. And most of the listed companies would be dealing with a lot of fiduciary institutions rather than an individual. So therefore, those are the nuances that come to the fore when we discuss about this concept. Interestingly, there is a regulation in the PIT regulations itself. There is a provision which says that if an agreement contains a clause or a term where there is a restriction on a person that even if you get to know about a violation of securities law, you would not report it to SEBI, has been called a void agreement, or it would be declared void. It will be a void term or a void provision. But an exception has been granted to advocates there in that regulation. It's probably regulation 7J, where this is mentioned. So now this shows that even within the categories of fiduciary, law firms are otherwise defined in the category of fiduciary. They are, and rightly so, because they also they also work on the same principle of fiduciary relationship. So they are fiduciaries, but there is such a duty because it comes from their own act and own code of ethics, where they are not allowed to even regurgitate about the knowledge they have of their clients. But so far as the duties of fiduciary go, and we will have to, the discussions could be really nuanced when we talk about each category of fiduciary, because although, and because of, not because of something else, but because of the way the regulations are framed, because these are principle-based regulations, the principles may apply and must apply in cases of all fiduciaries, but the way they apply and the way they have to be implemented may differ from fiduciary to fiduciary. One of the key concerns that I had in mind while other speakers were discussing, and which was brought to fore by Amarjeet sir and Ankit sir, was that how do one knows with certainty, especially when they are not the listed entity itself, as to which information, which piece of the information is UPSI, or where exactly the UPSI arises, at what point. And if not, then what has to be captured in SDD? Whether everything? Because if you go by the definition, UPSI needs to be captured in SDD. So that means that everything entered in SDD becomes a UPSI, or that I have to identify and enter that in UPSI. Whether tomorrow in future in any prosecution or investigation, would the database of fiduciaries will be utilized by SEBI to charge a listed company with an allegation that the fiduciary recognized on day X that this was a UPSI, but you recognized it 2 months later on. So these are quite some issues which would come to the fore as we go forward and we see the practical experiences of implementing this provision of law. But principally, yes, it is a good thing to expect, and it is a beneficent goal to achieve. But I think the legislative footprint is scanty on this particular aspect. And unfortunately, we would be maturing in terms of this law only after a lot of ruinous litigation and penalties would be imposed. And people who would be under genuine confusion might also get punished during the course. So, but that's not the point. See, if in insider trading violation you punish people, you do it post-mortem. The damage has already been done. And the idea of changing the old regulations to new regulations, apart from, of course, keeping it up to speed with the dynamic nature of market, was also to see that we are not taking only post-mortem actions, but really we go on to the self-governing model and have a model where the violations are minimized rather than each and every violation is punished, because that's a goal which you can't achieve. You can't punish 100% of violations in market. So what you can do is you reduce or mitigate the chances of violations from occurring. And that is why they did put in place all these internal control systems, the concept of SDD, and the host of other measures that we see under the PIT regulations, all embedded now at one place. So therefore, also for fiduciaries, that kind of system, that kind of kit, a kit to be put in place where each and every fiduciary deals with the listed entity gets to know about that what their duties would be. Maybe principally, maybe all the situations can't be canvassed into one, but there must be something to guide the fiduciaries in order to save a lot of damage being done to the market. And sensitization, I think programs like this would definitely sensitize fiduciaries. And I think the message from SEBI is really clear that you don't follow, you think it does not matter, nobody is catching you, oh, I'm doing very little, or you justify yourself on one moral ground or other. I've seen people getting caught for meager infractions, which they still maintained even after being show cause that, oh, I did not do anything. And of course, I'm bound by confidentiality, but in some of the cases that I have been doing recently, I have seen many reputed professionals' name also coming in the radar of SEBI in their investigation sheets, which I derived, of course, through the course of exercising the rights on behalf of my clients to ask information from SEBI. So yes, this is real, and probably as we are doing this webinar, a lot of homework must have been done by SEBI to find out and analyze what is going on, what is the undercurrent, and the only suggestion I can give is one is to the fraternity and another one is to the regulator. Starting with fraternity, because regulations are on self-governance model, and it is for the fraternity and fiduciaries to first implement and comply, first bring their house in order, is to really carefully deal with the information which is susceptible to being categorized as UPSI and put in place these systems. Because if you do not comply, what you are essentially doing is a violation. So you take steps to comply. And these are not some rocket sciences or something. And there are tools available to assist them with ensuring these compliances. Of course, if one wishes to do it on their own, that's a Herculean task. But I think with the right kind of technology and tools, it can be done. It is achievable. It is not something which is not achievable. And to also put in place the internal control systems and all in place, follow that, ensure that the traffic signal is working. So in a sense, if I can compare it with an example, that SEBI wants every fiduciary to ensure that the traffic signal is working. When the light has to be red, it has to be red. When it has to be yellow, it has to be yellow. And of course, green is green. And there must be someone watching it carefully. If you want to go lax with this, with installing this traffic signal and regularly monitoring it, they will throw you out of road. That's the, I think that's the clear, and that's what I'm not using exaggeration to. You see the orders, you see the ramifications that people had to face, and you see the aftermath of all that. And that is the conclusion, fortunately or unfortunately. And I think for regulator, my suggestion would be that instead of focusing on post-mortem exercises only, we must also introduce some of the proactive elements in the regulation, or help the industry, help the fraternity to comply. Because this otherwise would fall outside the remit of securities market, all this. And then this is a very large market. Can't even imagine. I can't fathom what all will get included in this. But if that is the case, then we must guide them. That is also.
Thank you very much, Ravi. Thank you for giving your insight and suggestion, and requesting SEBI to follow and help the people, those who are under this, because this is a new concept. Okay. Now, Mohini, I have, can we take up now the question answer? So, Mr. Das and Mr. Ali sir, you are there? Yeah. So, sir, I'm just starting questions. So, you can, some question which are normal, and some question where you have to give comments, and some question you can leave it also, sir. Because so I'm starting this. SDD software is compulsory to professional, but how listed company come to know whether they have such system or not? Is there any penalty or to company if they do not they don't done such things? So this SDD software, Mohini, you can give answer to this.
Right. So the company need not to check that whether the professional is maintaining or not. the company's duty is to capture the status up to when they have transferred the information to the professional. Now it is the professional duty to maintain the SG software.
And
So
how he is
no one.
transferring. Yeah.
Yes.
Okay, sir, Ali sir or Mr. Das, you have any view on this? Because that is one question people are saying company is managing, so why I should manage?
UPSI, when it flows to intermediary or fiduciary, it becomes fiduciary's responsibility to further monitor the flow of UPSI within fiduciary. So, job of listed company will end once the UPSI flows to fiduciary. So, fiduciary has to independently maintain the SDD.
Okay. Provision for independent director with respect to these provisions. Moini, this is also applicable to independent director, but they are
no, independent directors, if the listed company covers them as a designated persons, then they are covered under the by the listed company's code of conduct. So they need not to have their own independent code of conduct.
So people have some confusion, sir. Ari sir, Das sir, some people are confused that independent director, they are also in a capacity to outsider, so they will come under a fiduciary. But when the company is managing their entire things, and there's no need to them to manage this. But some companies, some independent director, they have their own team, those who are advising them. What will happen to them? Because this is also a different ball game.
They'll fall under the company's jurisdiction. So company's SDD should take care of that. They need not.
No, you are right, sir. That is right. But point is that today independent director is becoming an institution. So they are having their own team to manage and advise them various things. So these people, independent directors, giving agenda to their team, and then they are advising them what is right, what is not, and then that person is buying and selling. What will happen?
SDD has to be maintained. It's like any other professional.
So independent director is supposed to tell that to the company, and their entry also should go to SDD, because now their advisors are also have access to the UPSI.
Yes.
Their details also should be part of the SDD.
Okay, so the very clearly that if the director is managing their work own, no problem. If they are taking help of others, they have to inform to the company and they should follow. But do you think in future this institution is becoming big and you are allowing independent director to have their own office managing things, then you treat them not as a designated person but as a fiduciary capacity? Is it possible in future?
At this time, we don't see in that manner, but if this is the new market structure which is coming out, maybe we'll look into it.
Okay. Please explain in detail about the designated person, how a merchant banker will decide about the designated person. Sir, Moni, you can explain.
Yeah.
Yeah.
So designated person, the same definition is already been given in the PIT regulations code of conduct. So their director, their promoters of the merchant banker, then the KMPs, and 2 level below KMP, and also the wings, because on the basis of the job and the functionality in the organization, the people can be classified as the designated person. So the team who is working with the listed company like an example in the like buyback transactions or any offer transactions, then those entire team can be categorized as the designated person. So the same rule applies on the merchant bankers for categorizing them.
Sir, Das sir, you have any different view?
Even I have the same view. I think it is already covered under code of conduct. So merchant banker has to read that and then follow that.
Okay. Okay. Moni, what is the requirement of annual disclosure?
It be covered under the code of conduct. If the code of conduct of fiduciary have the annual disclosure, then the company and the organization has to take that.
Okay. In case of UPSI is generated in a company and the fiduciary come to know about this, but they simply do not use or pass on to the UPSI to anyone, does the SDT requirement applies even in that case, sir?
Come to know means what? If while advising or through any business operations, it is given to them. So UPSI, because they are advising or they are helping the company, so it's given to them. So the SDT will applicable there onwards.
Okay. So whether you are using or not, that's not a question.
And yeah,
Okay.
it's a UPSI. Once you have a UPSI, you have to maintain the confidentiality of that. So whoever is getting access to that, that has to be recorded in a database, which is your SDT.
Okay. Can SEBI registered stockbroker providing stockbroking private limited company can do contra trade within 180 days? What is the restriction, sir? I don't think SEBI
Okay. See, if it doesn't have a UPSI, he can do anything.
Okay.
If he has a UPSI and a designated person, then designated person cannot do contra trade within
Okay.
6 months.
So he, as a normal person, he can do if he has any UPSI, then the contra trade rule applicable to him.
Applicable. UPSI as well as is a designated, has been declared as a designated person.
Okay. Okay. How proposed to be listed company comes under UPSI before filing DRHP or after filing RHP? As we know, all the information already in public through DRHP as how proposed to be listed company falls under UPSI. So he's asking two questions. One is DRHP, then is RHP. So first he wants to understand if you are saying that proposed to be listed company at which stage, DRHP stage or RHP stage?
So it will be at DRHP stage. It's already shown his intention to get listed.
Okay.
It will be at DRHP stage.
Okay. Does the merchant banking firm and AIF can be run by the same person? If no, then what kind of conflict of interest will occur considering the PIT regulation? I think,
Be applicable to both organizations.
yeah, yes, sir.
Independently, PIT would be applicable to both the organizations.
Okay. Does pre-IPO allotment falls under UPSI?
PIP, it's a private company, pre-IPO.
No, a company which is planning to come out with IPO, and before that they are doing pre-IPO allotment. So naturally, that company which is they are mentioning pre-IPO allotment means that company is planning to come out with IPO.
So in this case, the pre-IPO allotment doesn't fall under the PIT regulation. So after listing, the first trade will be the trade which falls under the PIT regulations. So from that very first trade, they have to take care of all the regulations with respect to trading.
Okay. Mehta sir, Mehta sir. Okay. Can we require the annual disclosure for all the DPs?
Yes, if the court says, then annual disclosures, then you have to take from all the DPs.
Okay. Does investor of the merchant banking firm is participating in pre-IPO round or anchor round, and same client is also investing in AIF? Does it attract UPSI or not?
This question is not clear. UPSI will be generated in the company.
Yes.
This guy is an investor, I understand. Who
So,
is
yeah, he's saying, sir, does investor or merchant banker firm is participating in pre-IPO round or anchor round? And then same client is also investing in AIF. Does it affect money? But how this is connected?
How?
He said,
Uh,
I think,
sir, I
Saurabh,
think-
you please clarify your question, then we can give answer.
yes.
Now, corporates are giving enough importance in sensitizing its employee across the organization on PIT and its compliances. It is the fiduciary and intermediaries who are lacking in this, despite the fact that they are supposed to be legal expert. We may say that Chirag Tale Andhera. This webinar is wake-up call to all of them. Okay. So thank you. But he's pointing out, Sudhakar is saying rightly, that we are the professional who is advising company to what law is applicable, and we are not aware. That is a question. So I think I'll request the Das sir and Ani sir and Sundarshan sir. I'll tell that let's create an awareness on this particular thing, because people are not aware. And I remember you both were that time you were there in the SEBI, but there was a takeover law came in 97, 98. But slowly 97, 98 when came, then nobody was bothering about anything. I remember it was applicable 20th February 97 or 98. And then you have to do compliances. But nobody was doing this, and what companies were saying, हमने कोई takeover थोड़ी करा company का. So they were not bothered about that. Without taking over any company, you have to follow some compliance. So that time I was president of Institute of Company Secretary in 2003. So me and Sundarshan sir and SEBI chairman, as Mr. Bajpayee has told, that you propagate this to entire India. So me and Mr. Sundarshan, we organized program across the country related to takeover laws. And that time there was a scheme also. The SEBI came 1,75,000 rupees. If you have not complied, pay this and regularize it. So across the country we visited, and we make this awareness camp. We have done the awareness campaign through SEBI. So I think this is also required here, sir. Let's do something before taking any harsh action to anybody, because they will say, I was not aware that I have to maintain SDT.
Actually, sir, when we started with SDD last about a year and a half back, so with the Institute of Company Secretary, we did many seminars.
Yes, I know.
For listed companies, and we all were, the full team was involved into it. And
Yes,
finally, a lot of compliance happened because of that. I think it's a good idea. We can take it forward.
Yeah. Can you share some example of insider trading, how they were caught? Sir, recent some case which is very popular, which is in public domain.
Public domain, so nahi hai, but I can just give you an example of what happened very recently. I was just going through some investigation case, well, I'm still working on it, where sir, jane dijiye. We can have another session on this, because then it will take a long time explaining how things happened. But to be very frank with you, with the audience, we find fiduciaries getting involved into it. And we have, and the cases are going on. See, we have not come to the stage of completion, but you'll find the orders very soon, so that it is there.
Sir, we will organize one program on some case studies on various insider law. How people are doing insider, so we can compile it, 7 or 8 cases, and tell the market that these are the things people are following. So there is a possibility that you are one of them who is doing this type of activity without knowing or knowingly. Okay. Why this sudden hue and cry about SDD compliance by fiduciary and intermediaries? Mohini, can you tell? Because I don't want to put Das sir and Ali sir. This is not a hue and cry suddenly. This is long back. Yeah.
This is since 2019. This was there, but yes, listed companies like Das sir has already said that in last 2 years they have very much SEBI is personally involved in educating the listed companies. Now, because this is applicable on the fiduciaries, so now the duty comes on the fiduciary that they should also maintain this as ready. Reason being, they are not the single person. In many of the cases, they are the organization which are working. So the information flows with them within their organization, and also they are converting some information received from the company again into UPSI, and they are sending back to the company. So that's the reason now the fiduciary also must be aware of. So there is no hue and cry, we can say, but yes, the awareness now, this fiduciary world now started on this. I think Ravi also want to add something on this.
Yeah, I just wanted to add one or two liners to this. You see, whenever the only short way of curbing the meanness of insider trading is to know who all possessed UPSI. Because if people think that they can go scot-free by encashing or scavenging on a UPSI, they would do it because that's the natural intent and the fraud triangle, which I'm sure Ali sir and Das sir both have studied and analyzed so many times. So why there is a focus on capturing the intermediaries and fiduciaries so far as the leakages of UPSI is concerned is that when they really investigate, beyond company, the footprints go vanished and they're not able to see where the information went and how. So they had built the cat by SDD, these companies and all, but now beyond that also, they want to see where the footprints are going, where the tiger has walked, where all UPSI has traveled and where all it has branched out. So I think if we are able to build a compliance culture around the concept of maintaining and monitoring UPSI across this segment of fiduciaries and intermediaries, I think one is that automatically a signal will go to people and people will be self-aware that they can't trade and encash on UPSI and go scot-free. Number two, if at all someone tries to do that unscrupulous act of encashing on a UPSI, then the regulator will follow the trail and reach out to them quite swiftly. Today, not that SEBI can't reach out. SEBI can reach out because preponderance theory is already there. Surrounding circumstances, they are able to cull out and they pull out a lot of smoking guns around them.
Okay.
But I think it will be a clear-cut, more swift. So the enforcement, one of the anvils of which is speedy, that will be ensured. So that's why I think if at all there is a hue cry, I feel that must be the reason. And Das sir and Ali can.
There's a very interesting question. How will we ensure that outsider like auditor is maintaining SDD? Can company take any declaration from them? Because they are saying a auditor is there, but whether he's managing or not, it is a responsibility of company or him by. So as per the law, this is the responsibility of the auditor.
Yes.
But sometime auditor is doing something and his team is doing something, and then and the negative name is coming of the company's script. So can they take a declaration from the auditor that are you maintaining SDD?
They are free, they can take, but that's the moral, as everybody is saying that it's not only the PIT regulations per se, the moral duty of the auditor is that to maintain that confidentiality. So now the companies are asking, I think Ankit can add on that they are asking the consultants that they are maintaining their SDD or not. So I think they are also now want to enforce key, you should also maintain that thing. So, but not mentioned in the law, but by practice, yes, they can.
Okay. Sir, you want to add anything?
Law actually says that they have to maintain, and between the company and the fiduciary, whether they want to have take a declaration or have an understanding, it's up to them.
Okay. Okay. If some consultant we have executed NDAs, still we need to capture the same in UPSI?
NDAs with respect to that, you will not disclose it to someone and you have to maintain the confidentiality. UPSI, SDD is with respect to that the information is shared with who? Even in the organization, as a NDA, you are maintaining the confidentiality only, but it's nowhere be related with and that you need not to capture in the SGD. So that's the two separate things.
Okay, all SEBI registered intermediaries should maintain SDD. Answer is
Yes.
yes. Okay.
Because if they are in possession of UPSI, they have.
Okay, sir, what happened when the company goes for informal guideline for an issuance and SEBI official aware UPSI? Maybe how SEBI official are different from consulting firm. So he's asking that I am asking some informal questions, so you have the information. So how you are different from
Why somebody is giving UPSI to SEBI?
Okay. No, sir. Sir, somebody is asking some informal question that I am coming out this merger or I'm doing something, and
So
because
you're talking of informal guidance.
informal guidance. So I'm asking SEBI that I am merging two companies, and this because of this reason the shares will be like this. So you are aware that this company is doing merger. So the question is regulator should be different from the general thing. But if we see the larger picture, is SEBI should be treated as a consultant? Or he's asking SEBI official are different from consulting firm?
He is not asking for advice. He is asking for what would be the compliance requirement.
Yes.
Within the contours of law, whether he can do that transaction. Correct.
Okay.
So it is only specific to whether under the law whether he can do that thing or not.
I can just add this, even if the SEBI officials are getting so-called UPSI, SEBI regulation, employee regulation does not allow the staff to trade or they are bound by the internal regulation, and the regulations are very strict. So,
Okay. So umbrella rest how much is there for you that you can't?
Yeah.
So that's why. Yes. Okay. Okay. Does it mean that designated person without UPSI can do contra trade, Moini?
Designated person, any person who is designated as a designated person can't do contract. It not to be related with any UPSI. With respect to your security only, if in the listed company and in the fiduciary, what the code of with respect to the restricted list is to be there.
Okay. Shares offered in IPO and FPO to employee who may have UPSI. I think this question is incomplete, so we are not covered. The merchant banker doing AFI as well as user. This is also same. Merchant banker had to record. He's saying the merchant banker doing AIF as well as, so they can use the investor for pre-IPO and for anchor round before listing. Same investor. They are using for AIF and using for pre-IPO. So merchant banker had to record the SDD before propose the IPO?
Yes, merchant banker has to maintain the SGD. So this UPSI is applicable for proposed to the listed company as well. So if they are getting the information of the company which is proposed to be listed,
Okay.
and then they have to maintain it in the SGD.
Okay. Exact point of time of record the SDD.
The exact point of record in the SGD for the listed company is that when the UPSI originates. And in the FAQ, one of the FAQ, they have very clearly mentioned, exchanges have given that when the probability of going ahead with the decision is more than not going ahead, that point makes the information as a UPSI. So company will maintain it in SGD, and when they share it with the fiduciary, at the same time, they have to inform the fiduciary that now I'm sharing an UPSI with you. Now you have to maintain the confidentiality with you. So if the company will inform you as a fiduciary that I am sharing your UPSI, so now it's my duty as a fiduciary to record it in the ST from that point.
Okay, okay. Moini, now people, Amarjit Chopra has also mentioned other people. How you are advising to your client, those who are those who are a fiduciary or those who are a consultant, what types of things you are advising them? What types of SDD? Because SDD for big companies is costly, for SDD for them is a very small. So you have any model for them, for intermediaries, for fiduciary?
Right, we have. So we have tried to simplify the basic provisions of the SGD for the fiduciaries. There is presently a manual system is also there. If it's a small company, they can feed it manually. And if it is a large organization, then definitely the auto system fetching from the mails itself can be done. So now I just take only 1 minute or 2-3 minutes to showcase that product. I just feel so that it gives it how insight on that how we are doing it. So in this, what we are doing is that it's a web-based software definitely, and if even if you provide us the small fiduciaries, then provide us a one system there we can deploy this application, and there in that like any other smaller application they want to manage it, they can manage it. So what all the things we are doing it in, like yes, data processing is there. We are capturing the document like the annual disclosure. Many of the questions have came for the annual disclosure system. So instead of taking it physical form, maintaining it in files, we are providing that you can just take online, and then in a PDF you can save in the system itself. Then definitely search and retrieval system through various reports are there. Integration of the information is there, and compliance officer, because like in the listed company, compliance officer role is very important. Similarly, the compliance officer role in the fiduciary organization is very important. So this tool helps them in complying the insider trading regulations in the tool in the organization. So what we, and definitely we have the reminders, audit trail, and like the other application to make it easy, because it's not the one person in the compliance organization like the compliance officer. They are getting the information of every listed company in which their other people are dealing with. So then we have given the separate interfaces for the designated persons as well. So they can do their, whenever they are receiving the information, they can do the entry in the SDD with respect to the receive information when they receive. The compliances are there, the reports can be there, and yes, it's easily available, access for 24/7. So mainly the functionality which we have developed is the restrictive list of security you can have. A separate interface for the admin is there. A complete recording of UPSI you can maintain. Alert and notifications are there. Internal control system, because PAN number we are capturing here, the immediate relative PAN number of the designated person in the organization need to be. So the person come over this tool and they can just update the information from their side. So the compliance officer need not to go to every person desk and have to collect that information. So whatever the basic information in the designated persons need to give, they can come over in the tool and then they can give. Definitely all the designated persons lists are there. When the UPSI has been received in the company, anytime if something comes on the fiduciary to explain to the SEBI or to present it before the SEBI, then they can have the complete record that when actually they have come across that UPSI. Might be UPSI is generated in the company 2 weeks before or 3 weeks before, but they come to know only by that mail or so. So they can enter those things, and all the this reports are available here. So basically, like this is the dashboard for us. How many licensed users are there? Active DPs are there. Insiders are there. How many restrictive list of securities are presently in the company are. We are not displaying the name on the front, but yes, because it's a confidential list which need to be maintained by the compliance officer. You can maintain the restrictive list of security. Once it comes, date of exclusion are there. Again, if it comes in the company, then you can enter on those grounds. Contact person, because a restrictive list, you are be dealing with company, then the contact person there with whom you are dealing, you have to take the details of those person, because PAN number of the receiver and sender both have to be captured. So the projects you can create, like the when for example M&A transaction is to be done. So like in the organization of the fiduciary who all are involved in that project, that they can create internally those projects here. All the data log reports are there when they have shared actual time. We are capturing on the data log report. So we have the application system controls over there. So sub-admin users can be created, and we are providing the complete document, user manual and all. and we have a storage, internal storage you can manage, and data can be stored for 8 years, and no edit is available. So strong confidentiality we are maintaining. So limit and the checking and arithmetic checks also be there in this entire subscription. So this is the brief about this application.
Okay, Mohini, just last question. How you are, somebody's asking, Sudhakar is asking, Mohini, can you throw light on how corporate professionals are complying with PIT for the employee and maintaining SDD? This will help other firms. Very
Right.
shortly, very briefly, you just tell.
Correct. So we are taking the insider law sessions in our organization, and we are very well, whenever any person is joining the organization, we are informing their do's and don'ts with respect to the same. And definitely NDA we are signing once the people are joining in the organization. Then SDD we have implemented here in the organization, and time to time, whenever we are coming across the UPSI and assignment we are entering, we are making those entries in the SDD. So that, and definitely we are taking the disclosures from the employee annually. We are taking an undertaking on that. So this is how we are maintaining that and complying with the this PIT regulations in the corporate professions.
Okay, okay. Thank you, Mary. Thank you very much. We have also overshoot the time. So thank you, Das sir and Ali sir, for your insight and patiently attending the entire program. So as a ritual, we are just for a 30-second or 1 minute, we are taking a concluding point. So I will start with Mohini and then Ravi, and then both the regulators from SEBI. So Mohini, what is your view?
So my view is that yes, like in the listed company, the companies are making aware of their company and their employees that what are their do's and don'ts and their responsibilities are. Likewise, I think now the time has came when the fiduciaries also will start educating their employees that what are their responsibilities when they are handling the listed companies. So that's the thing which the organizations should start to avoid any kind of non-compliances because of unawareness. So
yeah, Ravi.
I think fiduciaries and intermediaries should go for technological solutions rather than handling it in offhand manner and ad hoc ways, because that's anyway not going to comply with SEBI regulations, given that SDD needs to be time-stamped and a lot of requirements there, having an audit trail and all. So that's number one. Number two is certainly going to inspire confidence as a country, as a marketplace for entire world. And it is also beneficial for the indigenous investors, the retail investors who are going to invest in a market where level playing field is not only a hypothetical concept where it is being maintained because of these measures being taken by SEBI. And the third is, of course, it's a Herculean task to, administer. And very graciously, Ali sir and Das sir both have agreed to your suggestion of conducting more awareness programs of these sort, so that the message reaches and echoes across the segment and everybody is willing and forthcoming to comply with it. So I think that's my take on it. It's a wonderful movement, but we should focus on proactive measures rather than post-mortem. Of course, we know post-mortem expert is SEBI. No other regulator can surpass SEBI in that. But a little bit of proactive measures would help the industry and the fraternity in complying with it, and really emerging. Probably we would see the investor protection ranking going even forward with these measures. Thank you.
You are on mute, sir.
Ali sir, your word of advice to all the people.
One sentence. Let's start the awareness movement which we have started today. Let's go a little further. And I think over a period of time, we'll be all compliant fully.
Okay.
I concur with what Ali has said. Actually, it took us a lot of effort with the help of exchanges to increase the compliance of the listed companies. And I think this education program for fiduciaries and intermediaries will help SEBI as well as the fiduciary to comply with the PIT regulation requirements.
Okay. Okay. So thank you very much, sir. Thank you. Thank you, Ali sir, and Ananda Kumar Das sir, Mohini, Ravi, Ankit, Mehta sir, and Amarjit Chopra sir for participating and giving their own perspective. And special thanks to Das sir and this. Sir, we have done this. We are doing survey also during this. So I'm just reading out the survey. What is your role in the securities market, fiduciary, intermediary? Today, those people attended and giving answer. 63% is fiduciary and 37% are the intermediaries. Understanding of regulation. Do you think the current SEBI PIT regulation are adequate to curb insider trading? Answer is yes, 55. Answer is no, 70%. And unsure, 28%. So people are more doing this. Compliance implement. Which compliance requirement do you find most challenging to implement? So 46% saying the maintaining SDD, 11% saying formulating a code of conduct and managing a restricted list. This is 23%. Reporting trades of designated person and relative, 20%. Now this is very important questions which you can take a clue, sir, that how the people are struggling on this area. So maintaining SDD is not only culprit, other three things are also culprit because they have to follow all these things. The next is which area of SEBI PIT regulation would you like more clarity on? Definition of UPSI they want. Responsibility of fiduciary, that is highest, 45%. Digital database requirement, 22%, and penalties for non-compliance, 10%. So here the awareness is also required, and the most important awareness is the fiduciary responsibility. The future regulatory enhancement, what additional measures should SEBI consider to enhance the effectiveness of insider trading regulation? Stricter penalty, 10%, more retail guideline, 51%, increased transparency of process, 27%, more frequent audit and checks, 13%. So these last question, this technological impact, significance, 83%, yes, slightly, 14%, and no, it could make things more complicated, 3%. So I think 97% people are in favor. So this survey which we are doing during the program, now all the survey answer and the queries which we have received, we will send it to you, sir. So you can take care and understand that what is the pain point and how the SEBI can come out with some FAQ, something else. So on this aspect, and my request is, sir, PIT regulation FAQ, we have worked out, we have done the program. So, but I think PIT FAQ on fiduciary or intermediary should be separate, not with the part of the PIT. So people, those who connected to this, they will immediately jump and they will see, okay, from one to last point is connected to them. So they will feel at home and they will follow this. So with these things, I thank again Ali sir and Das sir and Mr. Mehta, Amarjit Chopra, and person from our side. Thank you very much, friends. Thanks for participating, and all participants, those who have come and asked around, I think there are 30 questions people have asked, which we have tried to give answers. So thank you very much all. So friends, this journey of knowledge sharing will continue, and our next webinar is 169th webinar, that is on front running in the stock market on 26th April 2024 at 4 o'clock. We will do this, and we'll do how the front running, what is the meaning, because that is also connected to the same way people are doing trade without realizing that this is a violation, this is a penalty area. So we want to discuss that what is front running, how many cases SEBI has decided on front running, and how you should avoid this type of front running, that you are buying something on behalf of somebody, and before buying, you are buying your own stock. So sometimes you are thinking, what is wrong in this? But rates, things, ethical and governance, so many issues are there. And the SEBI has penalized so many people that we should do. So this program we will do on 26th April. Till then, thank you very much. Thank you.
Thank you.
Thank you.